Let's shift focus to one nifty company, Lupin. S. Ramesh, the CFO of Lupin, joins in now to talk about some latest developments on the company. Hi, Mr. Ramesh. Thanks very much for joining in today. First, I'm going to start by asking you about Cipro generic, the one drug that you've received approval for on Friday itself. It is expected to be a 180-day exclusivity drug, if I'm not mistaken. Can you just take us through how much of an opportunity it is for you, one, and two, going forward, what does the U.S. pipeline look like?
Yeah, Cipro OS is one of those first two files that we had in our portfolio. If you recall, we've always been saying that, in fact, our first two files is perhaps the highest in the industry. We got about 30 first two files to launch, and this is just one of those products that we're launching. But that said, it's not a very big product. It would perhaps address a market space of close to about $8 million. That said, it's one of those niche products that we are talking about. But that said, it's an important thing. But it's not going to garner much revenues for us.
Okay. And what would your U.S. pipeline look like with this generic launch, and how much do you have in terms of a pipeline and market size in FY15 that we can expect for the U.S. generics market at least?
The U.S. generics, we have close to about 200 filings, of which about 72, 73 products have actually been launched. So you would expect about 100-odd products to actually get launched over the next 2 to 3 years. And this would straddle across, in fact, a host of, therapy areas. We have, in fact, the entire OC's portfolio. We've got about 14, 15 products launched there. We've got another 15 to go. We also have started filing for, in fact, ophthalmology, and you could expect a few more launches from that niche therapy area. But apart from that, we also have this host of, in fact, a niche, a lot of those opportunistic interventions the market provides for us, and we have actually filed for it over a period of time, and those would get launched. But more importantly, we're getting into more specialty, which would include the respiratory space, the dermatology space, and potentially into controlled substances or even complex injectable space, for which we have actually looked at. We bought over this company in Netherlands, which would be actually an R&D company for complex injectables. So our pipeline going forward is going to be richer.
Mr. Ramesh, hi, good morning. What about other geographies, Japan and Europe in particular?
As we said in our last investor call, in fact, we've been building up the building blocks, in fact, for becoming bigger in Europe. So we recruited, in fact, a very senior hire, Maurice Schonau from, in fact, Teva, and he's in charge of, in fact, Europe and Russia. We're actually beefing up our skill set for actually growing bigger, in fact, in the European market. Japan, of course, remains the second most important market for us. And we have got two companies going out there, Kyowa, which is doing very well, and in fact the second company that we bought some time ago, more into the injectable space, called Irom, which we face some teething problems, but over a period of time we expect that to settle down. Japan per se is growing about 12 to 13%, and that's a fairly decent number given the fact that the market is growing around 10%.
Okay, and what about the India business, because that was a bit of a disappointment last quarter?
Yeah, but that's because the fourth quarter is generally a lackluster quarter for us. If you look at the whole of last year, we had, in fact, lots of other problems. First, of course, was the introduction of NLEM, which actually brought in its wake a host of complexities and a lot of uncertainties in the market itself. The second quarter, we saw issues leading to the trade margins. The third quarter, in fact, we saw some robust results growing at a fairly decent percentage. The overall results were a little lackluster, about 5.6% for the whole of last year. But we do expect the growth rates to perk up in this quarter itself. And I'm sure that this year, you'd find, in fact, the economy also bouncing back. And in fact, looking at IRF, we're fairly confident that we'll sustain a growth rate of about 15-16% for the full year. And that should be seen in line with, in fact, our past track record of about 20% growth over the last 5 to 6 years.
Okay, so what sort of recovery can we expect in the domestic market? What is a sustainable rate that it will come in at in terms of growth for this quarter as well as for FY15?
As I said, perhaps last year was an aberration, more because of, in fact, the ecosystem around us and, of course, the economic factors itself. But I think the long-term secular growth rates for, in fact, the pharmaceutical industry in India could be about 15 to 20%. For us, that is. If you look at the industry, perhaps about 10 to 12%. And given that, we would expect, in fact, growth rates well over 15% this year.
Okay, fair enough. Mr. Ramesh, I just wanted to come back to the US markets because the sticky factor in the US markets for last quarter at least was the branded business, which a lot of analysts were not too happy about in terms of its performance. Can you just take us through how your key drugs are doing within the branded space in the US markets, such as, say, the Aero Chambers of the world as well as Antara, and what is your guidance in terms of the branded business in the US for FY15?
If you look at our historic past, the salience of, in fact, brands was close to about 25% of our total turnover in America. It's come down dramatically since then, and it's hovering around the 10% mark. That's possibly because of the fact that, in fact, a couple of the products have been phased out. Antara became generic, in fact, about a year and a half ago. And the second product, Aero Chambers, is also phased out. Suprax continues to be the mainstay of our business, our brands business in America. But that apart, we also have introduced, in fact, two other products. One is called, in fact, Locoid, which is a low corticosteroid for, in fact, dermatitis amongst, again, children in America. And, of course, Elenia, which is, again, for diarrhea, again, for children in America. But it's too early days, It'll be some time before they actually start clocking up bigger revenues. They are marginal products today. But that said, we are actually trying to beef up our overall brands portfolio in America with looking at acquisitions, in-licensing opportunities, and so on. The medium term, obviously, these would be in-licensed or looking at acquisitions. But in the long term, we'll be potentially looking at products from our own stable, and that dovetails very well with our own niche specialty, therapy areas like looking at Optal, looking at, in fact, OCs and respiratory, where I think 505(b)(2)s or, in fact, branded products would be possible from our own stable.
Okay, and what are your acquisition strategies? Because you have reiterated that maybe you'd like to grow in the Latin American market more aggressively. So maybe something like a Brazil would be on the cards, and something decisive that we could hear from the Lupin stable in FY15 with regards to an acquisition?
Right. We've always said that that our appetite for our acquisitions is, in fact, pretty large. We broke it into 3 buckets. One is, of course, the geographical spread of countries that we would like to be in. The second bucket, where you could look at technology platforms. And third, where we'd be looking at, in fact, various brands in countries that we operate in, including Japan and America. Insofar as the Latin American foray is concerned, we just entered Mexico, in fact, if you recall, last quarter. We'd like to grow in that. Brazil is certainly of interest, and if we do get a good value proposition which is compelling, we would look at it pretty seriously. But for sure, given the fact that our debt-equity ratio doesn't exist today, because we are actually a net surplus company, there is a possibility of actually looking at pretty large acquisitions. Perhaps, and that you would see this crystallizing in the next few quarters.
And what would be the acquisition size?
I think the size is not so material as, in fact, the value proposition itself. Today we are, it's quite possible for us to raise more than $1.5 billion, 2 billion. But that does not mean that we'll be spending the entire amount in 1 or 2 acquisitions. We'll be looking at acquisitions in various buckets spread over the next several quarters.
Okay.
All right, Mr. Ramesh. Thanks a lot for your time today. That's Lupin. The stock has recovered quite a bit.